Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, August 29th, and it was the day after NVIDIA earnings and the day before PCE. And SPY did open with a small gap up above the 35 EMA on the 30-minute time frame, and from there we pushed up right to the very last bear gap that is standing between where we are and all-time highs. And I'm going to zoom that out just a minute here, and you can see right here in July we made all-time highs at 565.16, and then we gapped down after that, and then we saw this huge drop down to the 1 week 35 EMA, and then we bounced back up. We saw that huge squeeze back up to this gap, and we've been chipping into it a little bit at a time, and today we actually got right underneath that level, but we got pushed back down even before getting into that gap at all. And you could see that we've been trading sideways here, and Stupid Willie has been losing strength. If you do use RSI, you could see the same thing. We did come right up to this gap right here with RSI at 86, and this is on the 1 hour time frame. And then we've been losing strength as we've been chopping sideways, trying to close that gap out. So heavy resistance just under all-time highs. And in SPX, we also saw that same gap up above that 35 EMA, and then we pushed up to the top of the implied move. I didn't mention in SPY where the top of the implied move is, and actually the implied move in SPY was above all-time highs. So if right here you did sell 56.40, 56.50 spreads, we did get pulled back in, and those would have closed up 100% for you. I actually took the safer route. When we got right here above the implied move, I actually looked to 56.50. I sold 56.50 and I bought 56.60. And those also, when we pulled back, paid me 100%. So we did pull back underneath the 35 EMA, and SPY closed flat up 0.01%. SPX literally closed flat 0.00%. VIX came down 8.54%, and we did close within the implied move in both SPY and SPX. And then QQQ, we opened here with a small gap up right back to 474, and right above that we had the 50-day moving average, and we took it up to our first level of resistance right here, which we did see Tuesday and Wednesday. We did trade sideways there for the first half of the day, and then towards the end of the day we dropped back underneath the 50-day moving average, back underneath 474, and we dropped all the way back down to the 30-minute 200 moving average. You could see yesterday that was our support as well. And this 474 level right here, if we zoom out, we can see that it was support right here, and then again right here, and then when we gapped down right here, when we swung back up, it was resistance. And then ever since we filled that gap, we've been trading just above it, and we've been trying to hold it as support. Last 2 days we've been chopping around 474. So QQQ was our biggest loser today, down 0.15%. VXN closed down 8.86%, and we did trade completely within the implied move here today. Today, if you did sell spreads at 481, there wasn't a whole lot of premium up here, but if you did, those did close 100% for you. And switching it over to IWM, we did open here with a gap up, and you could see that long wick. We did close out that morning gap with the first candle. So we did open up, we dropped, and then we came back up, got above the 35 EMA, which you could see Tuesday and Wednesday was a resistance. And then we came up, we filled that gap from Monday going into Tuesday, and we got up to the top of the implied move on the day. And we got just underneath the top of the implied move for tomorrow before we pulled back, and we closed just underneath the 35 EMA. So here that 220 strike did get in the money, and if you did sell spreads, if you sold 220 and bought 221, then on that pullback down, those would have closed up 100%. IWM had the biggest up move today, 0.71%, and we did close within the implied move in IWM. And lastly, DIA also had a green day today. We did open with a gap up, and you could also see that wick here. It's really hard to see, but we did see that wick. So that morning gap was closed out. We came back up and got above the resistance from Monday. And then we pushed up. We got almost to the top of the implied move. So if you did sell 417, 418 spreads when we got to the top of the implied move, those paid when we pulled back and closed just a little bit above the 35 EMA. DIA closed up 0.62%, and we did stay within the implied move today, both on the day and on the weekly. And remember here, we actually only have weekly contracts, so let me know how you did play that. All right, tomorrow we do have PCE in pre-market. That is the Fed's preferred measure of inflation. And tomorrow is also the last day of the month. And we also have a 3-day weekend coming up. Monday is Labor Day. Markets are closed. So let's see how we close out August. It has been an absolutely wild month. And let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, please leave me a comment. I try to get back to all comments within 24 hours, and this is complicated stuff, so if I'm moving too fast, if you don't understand something, leave me a comment and I will try and put it in another way that might resonate a little bit better. And if you took an amazing trade based on something you learned here or a setup I gave you, then an easy way to show appreciation is to hit that thank you button. Buy me a coffee, buy me dinner. And if that's not something you can do right now, then another easy way to say thank you is to share this channel. Share it wherever you post your trading charts and ideas, and help other traders to find my channel. So starting in SPY, tomorrow's implied move is between 554 and 563, and that is from options. The 30-day average volatility is about twice as wide, 547 to 569. The implied move on next Tuesday's contract, because remember we have Monday off, is between 552 and 564. And within the implied move, the actual trading range is pretty simple because we have at the bottom, we have support, and at the top we have resistance, and it is a little bit outside of the implied move. But the first level is truly going to be right here, and that's going to be the 35 EMA. And if we get above that, then look to the top of the implied move, and that is at 563. And then if we get up here, then you could see that the bottom of the gap right here was resistance today, and the bottom of the gap is at 563.92, so let's say 564, and that lines up right with the top of the implied move on Tuesday's contract. And right above that, we do have all-time highs, and we did make those all-time highs back in July. And since last week, since we got back up to this gap, we've been trading just underneath all-time highs, but we haven't been able to fill the last bit of this bear gap. And then to the downside, if we do drop, if we come up and we see this as resistance, then look down to right here is where we did have support last Thursday, and that again was where we bounced on Wednesday, and that is at 555. 554 is the bottom of the implied move, and the 30-minute 200 moving average is just underneath us and projected outward, basically takes it to 554. I think we'll see this as support tomorrow. If we do drop to the 30-minute 200 moving average, I would likely throw on some spreads at 552. We also have the 50-day moving average underneath the two implied moves here, and also this up gap from consumer spending. And the 1 hour 200 moving average is in that gap as well. If you recall, that moving average has been pointing down. It did take a little bit of a turn upwards, and momentum there is starting to pick up. We are not necessarily bullish yet here. We do have the 50-day moving average above the 1 hour 200 moving average, and that is actually bearish. And honestly, not a very difficult trading range going into tomorrow. And SPX, the implied move over here is between 55.50 and 56.30, and that is from options. 30-day average volatility is much wider, 54.85 to 5,700. The implied move on Tuesday's contract is between 55.40 and 56.45. And same thing over here. We have a pretty simple implied move. We have the 35 EMA just above us, and then we have the top of the implied move at 56.30. And then resistance is right here, pretty much at Tuesday's top of the implied move at 56.45. And then we have that gap that we've been trying to push through. We're just underneath all-time highs, but we haven't been able to close out this gap. So resistance is the bottom of this gap at 56.52, and then the top of that gap is at 56.66. All-time highs are directly above that. And then to the downside, our first support is right here. It is at 55.60. We do have the 30-minute 200 moving average right here. Could definitely act as a support if we do drop. And 55.50 is the bottom of the implied move for tomorrow. The bottom of the implied move on Tuesday's contract is 55.40. So if we do make that move down to the bottom of the implied move for tomorrow, that's when I look to the next day's strike and consider putting on a spread. In this case, it would be a bull put spread. And I usually go $10 wide, so it would be 55.40, 55.30. I did have a few requests for me to explain how I would play the trading range, so I'm going to try and throw that in here and again. And of course, if you guys have any questions, just leave me a comment. And then underneath the implied move for the next 2 days, we do have the 50-day moving average. Here again, we have that consumer credit gap, and the 1 hour 200 moving average did turn up today. It was pretty much flat going into the day, but with that pop up at the very beginning of the day, it actually turned our moving average, and it does have slightly upward momentum. It's not like this 30-minute 200 moving average right here, but the momentum is at least not facing downward here anymore. So again, in SPX, not a very difficult trading range to close the week. And QQQ, the implied move over here is between 465 and 476, and that is from options. 30-day average volatility is between 458 and 483. And then this is what I found to be really interesting. This is Tuesday's contract, and it is really wide. It goes all the way to the outer edges of the implied move. So 2.5% move is what options is saying for next Tuesday. I don't necessarily know why. If you guys know why, is there some kind of event that I'm missing? But Tuesday's range is extremely wide. So $12 move implied on Tuesday's contract, and then to the upside. And before I actually do that, I'm going to take these arrows out because we have a lot on this chart, and I just want to clean it up as much as possible. So then to the upside, the first level to look for is going to be 474. Now 474 has been a long time support and resistance going back to the past 2 months. So let me zoom out and show that on a bigger time frame. Right here is 474. We saw it as support and support. Then we gapped down underneath 474. Then when we dropped, it was resistance. And then we dropped, that was the big drop we saw a few weeks ago. And then the rally back up. Once we filled this gap, we went just a little bit above it, and now we're back at 474. So that is a very important level. If we did a volume overlay around that, you'd see that there is just a ton of volume at 474. I'm not going to do that right now, but maybe I'll do that in a special chart over the weekend. But so 474, that's this green line right here. And since last Thursday, since we got rejected from 484, which is also a resistance level that goes back a little bit. I'm not zooming back to that. You guys can do that on your own. But we got smacked back down to that level. And since then, it's been in every day's trading range. So 474 and 50-day moving average, they're kind of running side by side and causing a little bit of chaos. So those are the first two levels to the upside. And then the top of the implied move, 476. And then this is the wild jump for the next day's implied move. This is Tuesday's top of the implied move is 483. And then you can also maybe look to this level right here. We did see resistance here, 478, but definitely keep in mind this disconnect right here. And that would definitely make this level up here, 484, an attractive short option if we did have a big move tomorrow. And then to the downside, we have the 30-minute 200 moving average. Yesterday, it was a support. Today, it was a support. And it is in the green here, at least the part that is projected outward. So that should definitely be one of the first levels to look for. And really quickly before moving forward, I did forget about this 35 EMA. It is right here, and it is facing down. So then if that 35 EMA and 50-day moving average and 474 become resistance, then 30-minute 200 moving average is the last known support. And if we break that, we do have the top of the consumer spending gap, which we did bounce on yesterday. And yesterday meaning Wednesday, not today, which is now yesterday. So the top of that gap is 468. We do have the 1 hour 200 moving average. This one is still pointing downwards, and that is going to cause QQQ a little bit of trouble here. And the bottom of the gap is within the implied move on Tuesday's contract. That is 462. And then we also have the 4 hour 200 moving average within the implied move on Tuesday's contract. And I really want to know why this contract is so wide compared to tomorrow's. And I know it's not because we have an extra day. But if I figure that out, I promise I'll make a really quick video over the weekend. But for now, that's just what options are saying. So that is QQQ. This looks like a pretty dangerous trading range. SPY and SPX are much cleaner. QQQ is a mess. So if you're trading this tomorrow or Tuesday, let me know what you guys are thinking. All right, and IWM. The implied move over here is between 215 and 222, and the implied move on Tuesday's contract is 214 and 223, and I did that in backwards order. The 30-day average volatility is 215 to 225. So to the upside, the first level to look for is going to be right here at 221. That is where we did see resistance today, and that is just underneath the top of the implied move at 222. What did I say this was? 221, and then 222 is the top of the implied move for tomorrow. 223 is the top of the implied move on Tuesday's contract, and 223 lines up right with where we saw resistance at the very beginning of the week on Monday. So we gapped up on Monday, saw resistance at 223, and 223 is the top of the implied move on next Tuesday's contract, so after Labor Day. And then above that, 225 is at the top of our trading range. This is the 30-day average volatility. I don't know what that is. That is where we did see a bit of resistance back here. So 225 at the top could definitely be a resistance if we do head up that way. That would be a big move, almost 3%. I'm willing to bet that 222 and 223 are much more realistic targets for tomorrow. But you never know. And to the downside, we do have the 35 EMA, and that's actually above us, so it's not to the downside, but it's right in the middle, and I'm going to put that in right there. And then to the downside, we do have support right here at 216, and you can also see that that is where we have the top of this down gap right here. So 216, we did find support there on Wednesday, and then just underneath that, 215 is the bottom of the implied move. The 1 hour 200 moving average did tilt up a little bit, so it's not completely flat anymore. We have the Jackson Hole gap underneath, so these two levels combined, and you can also see that 30-minute 200 moving average, that is going to be a support. There is a 98% chance that if we drop, that this would be a place where we see a bounce. There's just too many technical things going on here for it not to bounce. So underneath that, we do have the 50-day moving average. And IWM has been giving us some really nice big moves. Volatility in the Russell is at 24, which is my absolute favorite level. And IWM has not been disappointing. And definitely in the past couple weeks, it has been outperforming the S&P and the NASDAQ. So IWM actually looks really fun. And lastly, let's take it over to DIA. This is the Dow Jones, and bear with me as I explain what is happening here. So this is this week's implied move, this is tomorrow's trading range, and this is next week's implied move already. And DIA only has weekly contracts, so I have to improvise a little bit. But tomorrow's implied move is between 409 and 419, and then the implied move from last weekend, the reading from last weekend for the entire week was between 406 and 418. So to the upside, if we open up, the first level to look for is where we saw resistance today, 416, and then above that we have the implied move on the week. That is 418. That is going to be a level in tomorrow's trading range. That's going to be a level where we see a lot of institutional hedges, and then just above that is the implied move on the day at 419. And then the top of the implied move on next week's contract, that's next Friday's contract, is 421. And then to the downside, we do have the 35 EMA, and that is, we did trade completely above that today. And then right where we closed is this level right here at 414. And I'm going to zoom out. That was a previous resistance. And for the whole week, we traded between, so this was Monday that we gapped up, and then we got rejected at that resistance. We came back down to this resistance, and then we traded around there. And then Wednesday we dropped. We found support on the Jackson Hole gap from last week. We bounced back up, and we got above that resistance level right here. This was previous all-time highs. So we did actually make new all-time highs this week. I don't think I mentioned that at all this week, but DIA is the most bullish index right now. And you could see that it is, even the moving averages are in the order that they should be. We're making higher lows, higher highs, and then we have the 30-minute, 1 hour, and 2 hour moving averages in the order that they should be. So DIA is the most bullish index we have right now. Doesn't mean that we can't pull back, but look to this 30-minute 200 moving average for support. So that was a really long explanation of the 35 EMA. And then we do have those two levels right here. 412 was the other resistance that we saw right here. That was a support. And underneath that, 409 is the bottom of the implied move. And then we do have that Jackson Hole gap and the 30-minute 200 moving average. So definitely some interesting stuff going on over here. I hope I explained it well. It's definitely a little bit different with the weekly options versus the other four that have daily, but I'm trying to make it happen. And that's all I've got for tonight. Have fun tomorrow, trade safe, make sure you take profits when you're up. Have an awesome 3-day weekend, and I'll see you guys on